So we are doing financial statements of limited company. This is your very first chapter of IAL. And what you can expect in your paper is that they would expect you to make the cost of sales section or the profit or loss account or the income statement of limited company. Okay. So you need to know every aspect of limited companies. Are you with me?
Yeah,
Are you
miss.
with me? Okay, fine. What do you understand by limited companies? Can you tell me?
Miss, they're not liable to any future investments made.
And what is limited company?
That's not limited liability.
It has limited liability. Very good. Okay. Now the income statement or the financial statements. When I am talking about financial statements, it includes the income statements and it includes the statement of financial position. It is almost the same thing what you do of a sole trader or a partnership firm, whatever. The only thing new that is over here is there are some changes in terminologies. Okay, and these terminologies you need to know before you go to prepare. And there is one thing which is called the statement of changes in equity. Do you know what is a statement of changes in equity?
No, miss.
Okay, the statement of changes in equity, it deals with the shareholders funds. When I am talking, it is dealing with the shareholders funds. That means it is going to deal with your share capital, reserves and surplus, and anything that would affect the equity. Are you with me? Now,
Yes.
we are talking about financial statements. This was the introduction. The financial statement of our limited company, okay, is prepared according to IAS 1. IAS 1 International Accounting Standard 1. It deals with the presentation of the financial statements. Okay. And it tells that your financial statements should have IAS 1 is for limited companies. The financial statements of limited companies is published. So it is also called published accounts. What is it called?
Published accounts.
Publish accounts. So when I say as per IAS 1, I want the financial statements, that means it should have these five things necessarily. Okay, it should have a statement of financial position, which is also called the balance sheet, which has position of your assets and liabilities. Statement of financial position, it should have statement of profit or loss and other comprehensive income. This is just like your income statement. Comprehensive income, that means your profit or loss should also have other income. Are you with me? A statement of changes in equity, statement of cash flow, and some notes to account. So, as per IAS 1, we need five things to be compulsorily there. What are those five things?
The statement of financial position, the statement of profit or loss, statement of changes in equity, and the notes to the accounts.
Cash flow also, statement of cash flow.
Yeah,
Statement
cash
of
flow.
profit or loss should also have other comprehensive income. And when I am talking about notes to accounts, that means I have to mention in that it should have a summary of the accounting policies that I am using. When I'm talking about accounting policies, that means if I'm depreciating my asset, either I'm depreciating using a straight line method or reducing balance method. So it should also have the accounting policies that I've used and some explanation of what am I doing if I'm doing something differently. Okay. These are the formats that you need to know, and it has to be written that way, exactly the same way. Okay. Even if you don't have something in this format, you will put a dash. but the format has to remain the same. Are you with me?
Yeah, miss.
So the first part is your statement of profit or loss and other comprehensive income. First part, statement of profit or loss, other comprehensive income. You write revenue minus
No.
cost of sales. Revenue minus cost of sales gives you gross profit. Okay? Are you with me?
Yeah, miss.
Whatever calculation that is there in your cost of sales, that will come in your notes to account as a separate note. This would be your note number 1. And this notes to account will definitely be there because cost of sales has a lot of addition and subtraction. Are you with me?
Yes, miss.
Okay, fine. So the first part of it, okay, I'm just dealing with this part. Revenue minus cost of sales will give you what?
Gross profit.
Please be prompt in answering. Now we'll talk about cost of sales. So your cost of sales has a notes and they would ask you in your paper to prepare the cost of sales section. They might also ask you to prepare the notes for the distribution cost. Let's talk about cost of sales section. Cost of sales is made up of opening inventory, add purchases, minus closing inventory. Are you with me?
Yeah, miss.
Opening inventory of raw material, add purchases of raw material, minus the closing inventory of raw material. Opening inventory of raw material, add purchases, minus the closing inventory. Are you with me?
Yes, miss.
If you have any purchase return, it will be written as returns out. With me?
Yeah, miss.
Okay. If you have received any discount on purchase of raw material, that would also be deducted. So in between, opening inventory, add purchases, minus closing inventory. In between, if you have received any discount, you are going to deduct it from your cost of sales. And this discount is directly associated with your purchase of raw material. It should be definitely associated with the purchase of raw material. Are you with me?
Yeah, miss.
Okay. So can you just say this much part to me?
Okay, miss. So the cost of sales has their own notes, and in that notes you will have to write the opening inventory and that
Of
supply with the raw
raw
material.
material. This
Yeah,
has to be mentioned that way.
okay. Opening inventory of the raw materials, then you add the purchases, and if you have any discounts or returns that you send back, you just subtract them, and then you subtract the closing inventory of raw materials.
Okay. It should be opening inventory of raw material, add purchases of raw material, less discount received. This discount should be the one that is associated with the purchase of raw material. Okay. Are you with me?
Yeah, miss. Yeah.
This is associated with raw material. Less returns out, less closing inventory of raw material. This is our normal part. Only these two things were something that was different. With me?
Yes.
After that, your cost of sales, you will add all the direct expenses that are related to your product, that is related to your cost of the product, or that is related to the service that you're providing. Okay.
Mm.
So
Miss,
anything that is, yeah, tell me.
but like the depreciation and stuff, they all go for expenses, right?
Yeah, now that is what I'm trying to explain you. There are some changes in terminologies. Anything that is directly related to your product, anything that is directly related to cost of producing the product. Okay. that would be added to your cost of sales. This is something new. So, what is added to your cost of sales? Things that are directly associated with the product. So, whatever is your factory depreciation, your product is produced in the factory. Yeah.
Yeah.
So, depreciation of the factory should ideally be added to the cost of the product and it should be recovered. These are not other expenses. This is directly associated to the product and it should be added to the cost of product.
Okay.
Okay. Now, depreciation of factory machinery. Machinery is used to make the product. So depreciation of the product should be added to the cost of sales. Anything that is related to the factory, anything that is related to the production should be added to the cost of sales. So your factory power, your production staff wages, or I could say your productive wages are added to your cost of sales. Are you with me?
Yeah.
Oh, there might be sometimes maintenance costs. Okay. And in additional information, they would tell you that the maintenance cost to be apportioned to the product. Maintenance is for the product this much and for the office is this much. So in that case, the maintenance cost for the product will be added to the cost of sales.
So, like, Miss, they'll mention maintenance, or is it
Yeah, they will
the.
maintain maintenance cost and they would say you that this is related to the product and this is related to the office.
Okay.
So anything that is related to the product, anything that is related to production or the service that you're providing is to be added to the cost of sales. Okay? Are you with me?
Yes. Yes, Miss.
Then you will add the opening inventory of finished goods and you would deduct the closing inventory of finished goods. Still, are you with me?
Yes, Miss, you had the opening inventory of finished
So
goods.
opening inventory of finished goods is added because this was the unsold stock of last year and it will be sold this year. So it becomes the cost of sales of this year. And what is the unsold stock of the current year should be
The
removed out
closing and.
from the cost of sales. So this is your cost of sales section. If you're watching video, you would pause, try to recall everything and write by heart. Okay. For you, now I'm giving you some time. Make a note of this and try to recall the cost of sales section and write it for yourself. What are we studying basically? The statement of profit or loss or other comprehensive income. With me?
Yeah, Miss.
Okay. So your statement of profit or loss or other comprehensive income starts with revenue less cost of sales. With me?
Yeah, Miss.
For the cost of sales, you are going to show it as a notes to account.
Yeah.
So
Miss,
revenue,
for the notes, like you write in a different section or like.
you write it in a different section. You write it as a different section. Okay.
Okay.
So revenue minus cost of sales would give you what?
Gross profit.
Okay. So revenue minus cost of sales would give you gross profit. For the cost of sales, you make a different section. In your gross profit, you will add other income. When I am talking, you're going to add other income. So that means there are two types of income. One is your main source of income, that is the buying and selling of your product that is related to the product. That would come in gross profit. When I am adding other income, That means you are going to add the income from non-trading activities. Like you've received some bank loan interest, or you have invested money somewhere and you have received interest. So this would be added in your gross profit. This is called your comprehensive income. Are you with me?
Yes, miss.
So gross profit, add other income. This other income is related to what activities? This is related to non-trading activities. Okay. So gross profit, add other income, you would arrive at a figure. Okay. From this, you are going to subtract your expenses. Expenses would be categorized into three categories. What is your distribution cost? One is your administrative expenses, and one is your financial cost. With me?
Yep.
Distribution cost, you will need to find out the total and just write the total figure over here. So your expenses are categorized into three categories. What are the three categories? Can you please repeat? Just give me a minute. Yeah. Your expenses are of three categories. What are the three categories?
Distribution, administration, and financial costs.
I want the names, darling.
What?
Distribution cost.
Yeah, distribution cost, administration expenses, and financial costs.
Okay. So these are categories. That means there would be more expenses that would go under this category. Yeah.
Yeah.
Okay. So that means there will be notes of account to this. This would be your note number two, which would come in your distribution cost. So when I am talking about distribution cost, this is associated with transferring your finished product to the customer. Okay. So when you've made your finished product and whatever cost you are incurring to transfer it to your customer, okay, would come under this category. Now, if you have made the product and you have to transfer the product to the customer, there would definitely be some sales commission, some selling costs, marketing costs, there would be packing costs, storing the product. So, every cost that is being incurred by you, which would be related to transferring the product to the customer or distributing the product, all those costs would come to the distribution cost. Are you with me?
Yeah, miss.
Even if you're giving your customer some discount so that the customer buys the product, that is discount allowed. That would also come under distribution cost. So some examples of distribution cost is you're giving your salesperson commission. So that is related to transferring the product to your customer. Your delivery vehicle expenses, depreciation of your delivery vehicle, the shop where you are selling the product, rent of that shop, your staff wages, transportation, your shop sales person, staff wages, your warehouse where you're storing the product, the power of that warehouse, rent of that warehouse, rent of your selling shop, okay? The showroom that you have to sell your product, rent of that. Shipping cost if you want to ship the product to your customer. Any promotion or advertising that you're doing. Your where you're storing your product, warehouse. If you have a manager over there and you're giving him salary, this all would become a part of the distribution cost. Discount allowed is also a distribution cost because you're doing this expenditure or this loss so that your product is sold. So all this comes under distribution cost. I'm giving you 2 minutes time. Just go through it and tell me if you have any doubt with relation to distribution cost. the statement of profit or loss and other comprehensive income format to me up till now.
What, miss? The whole format? Okay. Uh, so for the statement of profit or loss, you get the revenue and then you subtract out the cost of sales. And the cost of sales has its own notes.
Okay, go ahead. Then you arrive at revenue minus cost of sales would give you.
The revenue minus cost of sales would give you the gross profit. And this is the trading activities. And then there are other incomes which you get from your non-trading activities, maybe interest from
Add
bank
other
loans or
income
act. What,
and you
miss?
will arrive at a figure.
Yeah,
From
and
the
you're right.
gross profit, you're going to add the other income, you arrive at a figure.
Yes.
Then you would deduct
Deduct there's three
expenses.
types of
You will
expenses.
deduct expenses. What are these first expense that you would deduct?
The distribution costs are the costs that are directly related to selling the product
To the
and
customer.
to the customer, yes. And the administration expenses could be your
Yeah, I'll go on that.
yeah,
So expenses, you will first deduct your distribution cost, then you will deduct your administrative expenses.
yes.
After
And
deducting these two expenses, what you get is called the profit before interest and tax. It is also called your PBIT,
PBID, profit before
profit before interest and tax.
okay, PBIT.
PBIT. Okay.
Okay,
When I am talking about administrative expenses, so this would include all your office expenses, everything that happens at the office. Also, bad debts, increase or decrease in your bad debts, that is also called your irrecoverable debts. Now, there are at times that you would try to think that bad debts is related to selling. Okay. You need to understand bad debts or irrecoverable debts is related to the office. So, in bad debts or increase and decrease in your provision for doubtful debts, provisions is also called your allowance to bad
for
debts or irrecoverable debts or your provision for doubtful debts. Okay. So, if there is a decrease in your allowance, you are going to subtract. If there is an increase in your allowance, you're going to add. Are you with me?
yeah.
Okay. Remember, decrease in allowance would be subtracted from your administrative expenses and increase in allowance would be added. So everything that is related to office comes under administrative expenses, like your bad debts, increase or decrease in your bad debts. Increase in bad allowance for bad debts is an expense for you, so it will be added. And decrease in the allowance is an income, so you will subtract it from the expenses. Okay. Your office staff wages, your office rent, office power, any amount that you're giving to your auditors would come over here. uh, Office equipments if you're going to hire it from someone, and depreciation on office equipments. Are you with me? Now, there is a thing about discount allowed. Discount allowed is ideally treated as a distribution cost.
Yeah.
But if the question tells you that treat discount allowed as an administrative cost, you're going to treat it like that. Are you
So
with
only
me?
if they mention that it's for office or like administration, only then you add it over here.
Only if they tell you treat it as an administrative cost, you treat it. Otherwise, it would be treated as a
Distribution.
distribution cost.
Okay.
Are you with me?
Yeah.
So you have revenue. From your revenue, you minus your cost of sales. You will come at gross profit. In your gross profit, you add your other comprehensive income that is related to your non-trading activities. You would come at a figure. You will minus expenses. The first two expenses would be distribution cost, which also make a note. Administrative expenses. You are going to add both of this in the inner column. The total operating expenses. These are called operating expenses. Take a total of this, take it to the outer column, and you will subtract it. With me?
Yep.
Then you would arrive at a figure which is called the profit
Profit.
before interest and tax. Okay? From
Yeah.
your profit before interest and tax, you are going to deduct all your interest expenses. When I am saying interest expenses, these are your finance costs. So, finance cost is the cost of arranging the finance for doing the business. I'm repeating. Finance cost is cost of arranging the finance for doing the business. Like if you've taken loan from public and you have to give them interest. So debenture interest, bank loan interest, or interest on bank overdraft. This would become a part of finance costs. Okay.
Yeah.
After you deduct your finance cost, you get profit on ordinary activities before tax. This name should be clear. Profit on ordinary activities before tax, because this format is prescribed by IAS 1. So the terminology should be used the way it is. Then you would deduct the corporate tax, and then you get profit on ordinary activities after tax. With me,
Yeah, miss.
corporate tax is the tax that you pay to the government. Okay. So, sole trader, the tax becomes a part of the financial statement. But for the limited companies, it has to be deducted from your profit to arrive at the final figure.
Mm. Miss, the
Okay.
corporation tax, they will mention it, right?
Yeah, they will mention it. So, this is your statement of profit or loss. If they ask you to prepare a statement of profit or loss, it should look exactly like this. Whatever other part becomes a part of your working or your notes to account. So these things should be there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 things should be there. Are you with me?
Yeah.
Okay, I'm giving you time. Just memorize the statement of profit or loss and comprehensive income. Write it once, then proceed.
Yep.
Okay, so this is our worked example one. Your question would be similar to like this, what we are doing, where they would ask you to make a cost of sales section, either a distribution cost section, or they might even ask you to make a statement of profit or loss and other comprehensive income. Okay, so this
Yeah.
is our worked example one. Whenever you're reading the question, you need to understand and you need to know where what you would write where. Okay, come on. Following balances is extracted from the books of Gale Fabrics on 31st of December 2019. Can you tell me where will direct material go?
Miss, on the cost of sales.
Okay. Discount received on material,
Cost of sales.
is it added or subtracted?
Subtracted.
Yes, very good. You should know this. Okay.
Yeah.
Factory machinery carrying value.
Miss, doesn't that go to distribution?
Factory is related to production.
Wait.
Yeah.
Yeah.
And factory machinery would be a non-current asset.
Yes.
So this will not go anywhere. Rather, the depreciation of factory machinery would go to your cost of sales.
Yeah.
Yeah?
Yeah.
Okay, fine. Fuel?
Distribution
Why distribution?
is because it's the fuel for delivering the this thing, right?
Okay,
The product.
okay. Right now you are saying this is fuel for distribution. Now
It's because
understand.
it's vehicles mentioned as well.
Okay, we will have to read the question, right? To arrive
Okay.
at any conclusion, we need to read the full question. The
Okay.
cost of sales is something that you should be 100% sure. But for expenses, you need to have you need to see whether it is related to office or it is related to your distribution, what it is.
Hmm.
Okay, come on. Inventory of finished goods on the first
That
page.
is cost of sales.
You will add or subtract.
This one you will subtract.
Opening inventory, you will add or subtract.
Subtract.
Yeah?
No, you add it. Sorry,
Think
you add.
properly actually.
You add it because it's the goods that were not sold at the previous year.
So yeah, opening inventory is added and closing inventory is subtracted.
Subtracted. Yeah.
Marketing and promotion expenses.
That goes for distribution.
Motor lorries carrying value.
Goes nowhere, right?
Hmm. What will go if something goes?
Huh?
If
What?
if the depreciation of the motor lorries is there,
It
where will
goes
it
into
go?
cost of sales.
So the depreciation would go to
Cost of sales.
why cost of sales? Where do you use lorry to make the product?
Oh, no, no, no. It'll go into distribution. Okay.
You don't use lorry to make the product, right?
Yeah.
So this will be a part of your distribution. Power.
The cost of sales.
See, for any expenses, okay, it can be a part. Power can be used in office also. Power can be used in factory also. Power
Yeah.
can be used in your warehouse also. So you have to see. Even this you will have to see for additional information. Okay. If you
Okay.
don't have any additional information, if you don't have any additional information, you would use it for cost of sale because power is something that is used to run the factory.
Yeah.
Rent on warehouse.
Rent on warehouse. Means that will go on the distribution, right?
Yes, very good. Warehouse is something where you store your product.
Yeah.
So distribution. Revenue.
It goes nowhere.
It goes
On
nowhere.
the no, no, on the profit and loss statement.
Okay. Vehicle running cost.
Vehicle running cost. Distribution.
Okay, very good. Wages.
It depends, yeah, miss.
Depends. You have to see.
Yeah.
Okay, fine. Very good. Just give me a moment. Try to read the additional and start with. Okay, let's go ahead. Okay. Sales staff receive a commission of 1% as year-end bonus.
Yeah.
Tell me.
Oh, where this goes? And distribution cost.
Sales staff have received a commission of 1% for year-end bonus on
Yeah.
all the sales made. No entries have been made in the books of accounts. That means you need to make entries in the books of accounts. Are
So
you with me?
yeah,
Yeah, okay, fine. So, what is your revenue?
my revenue is 543,500.
So, your revenue is 543.
500.
Okay. And commission would be how much?
1%.
So it would become, you may have to write the pounds, okay?
Yeah.
5435. This will go where?
Distribution.
So this will become a part of distribution cost. So when you write it as over here, sales staff commission, you have an option to show this over here, or you can make it as a working note number one.
Hmm.
Are you with me?
Yeah.
5435. Correct? True, are you with me?
Yeah.
Okay, fine. Depreciation on your non-current assets is calculated using reducing balance method, 20% for factory machinery and 25% for motor lorries. Factory machinery, 20%. And for motor lorries, how much? 25%. Which method?
Reducing balance.
Okay, fine. Do you have the things?
The depreciation to the not given, right?
Okay, fine. When they say carrying value, what do you mean by carrying value?
The current value.
Carrying value is the cost at which it is carried in your statement of financial position. So you have your costs minus your accumulated depreciation. Okay. You have your costs minus your accumulated depreciation. You would get the net book value, right?
Yeah.
Net book value is also called the carrying value. What is the net book value called?
A carrying value.
Carrying value. Carrying value is also called the reduced value. Yeah.
Yeah.
So factory machinery depreciation would go under which cost?
Which one, miss?
Factory machinery.
That will go into the cost of sales.
Okay. So depreciation on the factory machinery would go
Go.
under the cost of sales. So
Yeah.
if you see over here clearly, carrying value is called the reduced value. Okay. So
Yeah.
machinery is how much? 30,000.
Yeah.
Yes.
Yeah.
Depreciation is 20% and
Yeah.
6,000 of it would go in the cost of sales, and you would show it as the working note, whichever number you make.
Yeah.
Depreciation of the motor lorries would become a part of your
Distribution.
distribution costs. Whatever 51,000 into 25%, 12,750 will become a part of your distribution cost. Are
Yep.
you with me? So we
Yeah.
deal with sales commission. Whenever I'm reading the additional information, I would finish that off. I will make the working and we will put it in our sections that we make. Okay? Are you with me?
Yeah, miss.
Okay. So this is our two depreciation has been done. Now what have they asked you to calculate? Additional information is also there. Inventory of finished goods. Opening inventory of finished goods. Where will this go?
Opening inventory of finished goods.
Closing inventory.
Miss, that will go into the cost of sales.
Okay. Closing inventory of raw material.
That also will go into the cost of sales.
Add or subtract.
This is the closing one, yeah. So miss, you subtract.
Okay, fine. Remember, this would appear at the end
Yeah.
and this will appear at the start.
Yep.
Just to recall the format. Opening inventory of raw material, purchase of raw material minus discount received minus returns out minus closing inventory of raw material. Okay? And
Yeah.
closing inventory of finished goods would appear at the end.
Miss, these have to be in that order.
No, in the expenses you can shuffle.
Okay.
Okay, but the add and less of the closing inventory has to be at the end.
Okay.
Okay, even little bit here and there is okay. With me?
Yeah, miss.
Okay, fine. Now we come at power. Read power.
Power costs are to be apportioned between the factory, distribution, and the office in the ratio 4 is to 2 is to 1.
So 4 is to 2 is to 1. Factory
Yeah.
will go where?
Factory is 4. Oh, okay. It will go
Of
into cost of
sales.
sales. Cost of sales.
Distribution will go to the distribution costs
Yeah.
and office will go to the.
Administration expense.
Okay. So cost of sales, distribution and administrative. When you read, you will do the marking and you will write it over there.
Yeah.
Okay. And then first you read, do the markings, and then when you make, you do one by one. Additional information you can do simultaneously.
Okay.
Come on. Read about fuel.
Fuel is to be apportioned between the factory and the distribution. The ratio is 2 is to 9.
So 2 is to 9, factory and distribution. With
Yeah.
me?
Yeah.
Okay. Read ahead.
Wages
Wages for
include.
bifurcation.
Yeah. They're already apportioned.
So delivery staff and sales staff will go where?
Distribution. Office staff will go to administration. Factory will go into cost of sales.
Okay, fine. Now we've done all our markings. We have all our depreciation figures. Now we can start solving, correct?
Yeah.
Okay, fine. Cost of sales section. Tell me.
Cost of sales direct materials would be 135,000.
But it starts with,
Purchase of direct materials 135,000.
sorry,
135,000 is the purchase of direct materials.
do you start with purchase of direct material?
Yeah.
Yeah, sure.
Purchase of direct material.
You will
No, no.
start with opening.
Opening inventory of raw materials.
You will start with opening inventory of raw material.
Yeah.
How much?
Opening inventory 10,200.
This is opening inventory of finished goods.
Yeah.
You don't have inventory of raw material.
Yeah,
So
we
you
don't have much.
okay. So you would directly start with direct material.
Wait, miss. What about this? The inventory of raw material 2010 and additional info.
Where
Additional information, the second part.
additional information is closing inventory.
Closing inventories. Okay, yeah. So
Okay.
yeah,
Direct material 135,000. Opening
yeah.
inventory of raw material plus purchase. Any discount received?
Yes,
Where is discount?
2,100.
Where?
The
Yeah.
second on the line. Yeah.
Then
Then what comes
one
next?
minute, 1 minute.
Returns.
2,100. Now you will go section by section. This is done?
Yeah, yeah.
Done.
There are
Factory
no
machinery.
returns. So, miss, closing inventory of raw materials.
No, no, darling, you will go section by section, one by one. Now
Okay,
you have
okay,
factory machinery.
okay. Factory machine will go into the distribution cost. I mean, cost of sales itself.
I'm writing in between, okay?
Okay.
Depreciation of factory machinery. You can make this as working note number 2 because you've already made the working note number 1.
Hmm.
How much? 20%. Or you can do directly over here also.
Yeah.
30,000 into 20%. How much?
Wait, miss.
6,000. With me?
6,000. Yeah, miss.
Okay, fine.
Wait, miss. Someone's at my door.
I'm recording. Let's go to the next one.
Yeah. Fuel distribution 2 is to
Finish
9
this.
ish.
Finish this. You finish this.
Yeah.
Right?
Yeah.
Now I'm just cropping it as per our need. Now fuel.
Yeah, it'll be 6,000 as well, miss. For factory.
Fuel factory will go to cost of sales, right?
Yeah. So 6,000 on cost of sales and then uh two
So this
twenty
would
seven.
be 33,000 into 2 by 11.
Yeah, that is 6,000.
33,000 into 9 by 11. So this is
That's
6,000.
that
For
is
distribution,
27,000.
27,000. Okay, very good. We have already incorporated inventory of finished goods 10,200.
Yeah.
No, yes or no? Where?
Yeah. For inventory of finished goods, these go into the cost of sales, miss. 10 to 100.
Yeah. So I
It
will
goes on the
write
bottom.
inventory of finished goods.
Yeah, and there's closing inventory as well, miss.
Okay, but I'll go with line, right?
Yeah.
So 1st Jan 2019. So opening inventory is added, closing inventory is subtracted. This is done.
Yeah.
Marketing and promotion entirely distribution, right?
Marketing is completely distribution, so 21,000
Then
goes there.
motor lorries depreciation,
Which one?
motor lorries
Motor
depreciation.
lorries going to distribution.
How much?
I don't remember the number.
Yeah,
Wait, let
yeah,
me see.
51,000 into 25%. Yeah,
Yeah.
12,750.
12,750.
Okay, just do it. I will wait for you and then we will write together. Okay, so we finish motor lorry depreciation, right?
Yeah.
Now power. Power is distributed, cost of sale, distribution and administration. Come on, tell me.
Miss?
Tell me power. Where were
Oh,
you
okay.
then?
The previous question.
Power.
Power is on both, miss. The factory and the distribution. So
14,000 into 4 by 6.
for for a factory, it is 8,000, and for the distribution,
You give me
no.
calculation, darling, first.
Oh, okay.
14,000
14,000
into
into the ratio of this thing.
2
Four.
by 6. One
Yeah.
is 4 by 6 and one is 2 by
One is 2
6.
by 6.
And
So,
for
miss,
administration, it is how much?
for admin, it is wait, 4,000, 2,000.
Into 1 by 6, it's 2,000.
Yeah.
So this is how much power? 8,000.
Cost of sales is 8,000. Distribution cost is 4,000.
4,000. Okay. Then rent on warehouse.
Rent on warehouse is 35,000.
Then this will go in comprehensive income, vehicle running cost.
Distribution, it's 12,700. No, yeah, 12,700.
12,700. They want only cost of sales and the distribution cost section, correct?
Yeah.
Okay, fine. Then wages.
The wages, the delivery stuff, and sales stuff, they go into
The wages
distribution.
of delivery staff. and sales staff,
Yeah. For
45,000 and 38,500.
yeah.
Office staff will go in administration and we don't have to make the administration, right?
Yeah.
And then you have wages of,
Factory stuff,
so here, I
which
will write over here.
is 73,500.
How much?
73,500. Must
73,500.
by must for the power. Below the power, you need the closing inventory. Yeah.
Oh, so closing inventory of finished goods we have.
Yeah. Finished goods is 8,000 and raw materials is 2010.
Okay. So below the power, you have power will come down.
Yeah.
And you have closing inventory of raw material
Yes, of 2010.
to 2010,
Yeah.
2010. And you have inventory of finished goods
That's
on the
8,000.
last day, that is 31st Jan 2019, 8,000. You will subtract. So this is
Yeah.
the way you fill it, and this is how your statement would look. Your cost of sales would become 226,590, and your distribution cost will become,
201385.
yeah, just ensure that you follow the format. Now here see they put depreciation last, and these
Yeah.
two items should come at the last. Okay, and this should come on top. So with
Yeah.
this we complete the worked example 1 of your textbook, which is there on page number 7. Okay, your in the paper the questions also would look something like that. Now what I want you to do is I want you to try the worked example number 2 and arrive at the statement of profit or loss. First do
Yeah.
it, okay, and then I will discuss it with you. I'm waiting for you.
Okay, miss.